We start off with a big week, though, for Twitter. Shares surging more than 25% since Monday for its best week in 6 years. The jump coming after the company reported its second billion-dollar quarter in daily active users of 192 million. Pete, though, is selling. He's out. Pete, why?
Well, I think the run was just absolutely extraordinary, Mel. And when you take a look at it, I mean, they did everything right? They actually had some great monetization growth as well, up 27%. So when I look at the numbers, they're phenomenal. But when I look at the PE, I feel like it's a bit stretched at this point in time, even for this particular name. I mean, Twitter's always traded at a little bit of an inflated PE. It actually got back to a little bit more palatable. But this is a stock, Mel, that I was lucky enough to get at about $35 a share back in August. And I based my thoughts upon unusual options that got me into it. But also, we talked about this earlier today, but obviously going towards the elections. And it just seems like the right trade going into the elections. It was. The stock continued to move to the upside. And now we're seeing the stock absolutely just explode even more. It was up 11%, I think, on Wednesday after they delivered those great earnings. And I still love the company. As a matter of fact, Mel, I like it enough, and you and I talked about this, that I saw some unusual options in there today. I had to jump on those. So kind of a stock replacement. I'm out of the stock, but now I've got the calls to the upside.
All right. So you're still exposed to the long side if it does go higher. Jeff Mills, you can make the case that for some stocks, after you see earnings, even if it trades higher and therefore the valuations go higher, that stock has proven itself. And so therefore, that is a point at which you do get in. You do see the stock respond. You do have the earnings come through. Is this one of those cases?
I'm almost in the exact same boat as Pete, actually. They're doing a lot of good things. The user base is growing. They're obviously engaged in the platform. But I think if you look at some of the numbers, they still are underperforming in terms of advertising relative to others, Snap, Facebook, et cetera. I look at direct response ads just as an example. They're getting a little bit better there, but they were slow. I think advertisers are still seeing better ROI in some of those other platforms. But it also means that I think that there's a big opportunity for Twitter. They can optimize their platform for ads. They can engage some of these smaller businesses. So, I do like the story longer term, but I would also use this pop to take profits if I was in the name.
Yeah, Steve, when we had the earnings, we talked about this in terms of the growth comparisons to a Snap, et cetera, and the concern that maybe Twitter isn't living up to its peers. After this run, what are your thoughts?
So this boat's getting bigger because I'm in the same boat as Mr. Mills and Mr.
It's like a cruise ship here.
So that's right. So when you look back, Twitter's all-time high is 74.73, and that's from 2013, December to be exact. I think Snap is going to garner a lot of those ad dollars, as Jeff just said. If you look at a chart, as Pete just said, there's an RSI. The RSI is 86. That over 70 is overbought. So I think that even the company told us that they're worried about growth and they're worried about their numbers going forward because the comps are tough. The comps are when everyone was sitting home quarantined when the pandemic just hit. So I think Twitter is a gift at this price to be a seller. I would sell it. I wouldn't necessarily rush into Snap, but I'd rather be a holder of Snap than Twitter right now.
BK, before you jump in the boat or jump out of the boat or wherever you are relative to the boat that the rest of the three are in, let's say you were in this stock. Yes. You saw this rise this week, but you also know that there is an investor day for Twitter in a couple of weeks, and they may announce something big when it comes to monetization. What do you do?
Well, you know what? Meet BK on the Lido deck because I think you sell it too. It's one of those things. It's one of those things where the catalyst is already gone. So, yeah, are they going to announce something big in a couple of weeks? Maybe. But the whole trade here was the election trade. We knew there was going to be unbelievable amount of engagement. And then the biggest user of their product has, for the time being, kind of sailed off into the sunset. So, I'm a seller as well.
I think it's interesting that people say, Donald Trump being permanently banned from the platform, that is a threat to Twitter. That's one reason to sell. It wasn't a reason to buy it when he was on the platform in the first place, Pete. I mean, was it? I don't remember many bullish analysts out there saying, Donald Trump is going to spur engagement and therefore drive up the valuation of Twitter.
Right. Yeah, it's fun fodder. But no, you're right. I mean, I think the reality is that it takes this big, huge, broad base, and that's what we've talked about time and time again. And how do they monetize it right? And they are getting better at the monetization, as I said. So I think there's a lot of combinations. I don't think the loss right now of Donald Trump is a problem for Twitter by any stretch. You know, there's enough very interesting voices that come onto Twitter that I don't think it's just one voice from the president himself that goes out there tweeting away. I think there's plenty others. So the loss of the president, the gain of the president, I think that had a very minuscule amount of real tangible meaning, other than just it's fun to talk about.
You raised your hand meekly, Steve Grasso. So do you have a comment?
Yeah, because I wasn't sure. It's a Friday show, so I'm not sure how much time you have left. But when you mentioned the Investor Day, the only thing that they could announce is maybe having a charged subscription-based model. It's tough enough to get people on this for free. So I don't think there's any bull case scenario behind that either. So once again, another reason to be a seller here.
The minute they charge for a subscription, I'm off Twitter, that's for sure. Jeff Mills, I'm saying it right now. Jeff Mills, if not Twitter, then where in social media?
Well, I'll just go to the charts on that one. So you see Snap, big pop. You see Twitter, big pop. You look at the chart of Facebook. It's interesting here. It's sort of battling between that 50-day and 200-day. So I think if you get a break higher, I actually like Facebook here just from a chart perspective when compared to those other two.
All right. Well.
Shepard Smith here. Thanks for watching CNBC on YouTube.